Welcome to Market View with Ike Ios and Friends. The show that not only reveals and analyzes the inside story on today's market news, but also uncovers the areas where investors can make money right now.
Let's make good morning. Mike Ios, your host for my good guest, my very good friend, Mr. Mark Arbeter. Hi, Mark. How are you?
Great, Ike. How are you?
I'm doing well, and I was looking forward to speak with you today. The month of January is almost over. People tend to put lots of weight on what the markets do. So I'm curious to hear your thoughts. We have several markets to talk about today.
Yeah, I'd like to switch things up a little bit this week and focus on the apparent, what looks like a breakdown in the U.S. dollar index, which certainly has bullish implications for other markets on a historic basis. So if we go to chart number one, we had a glaring bearish divergence on the daily chart. This is the UUP. On the second panel, that's the dollar ETF. So we had a terrible divergence on the daily basis. And then we also recently broke trend. And when we broke trend, it was on a gap down. Typically, that's not great. So for the UUP, we've come in close to the 50-day, which we might stop it there for a little bit, but I think, eventually we get down, 28 area where the 61.8% retracement is, and that's also where the slowly rising 200-day is. We go to the third panel, another momentum indicator, the vortex indicator, has turned bearish for the first time since back in sometime last year. And then the lower two panels, we have a CTM trend that has weakened into neutral territory from bullish territory. And then on the bottom panel, we have a 14-day RSI, and you can see we put in a number of lower momentum highs, not confirming the highs in the UUP, and we've just crossed below the neutral line at 50, and typically that's not a good sign, and it suggests that the uptrend is over and we're going to have more weakness. If we go to, so let me back up, what are the implications, bullish implications of a break in the US dollar? One of them is strength in the emerging markets, and I have on the top here UUP. Middle panel is a weekly chart. This is a long-term chart of EEM. The chart goes back to the beginning of 2014. On the top panel, we have the US dollar index, the UUP weekly, the US dollar ETF. In the middle panel is the weekly EEM, and then the lower panel is the underperformance of the EEM versus the S&P 500. And if we were to draw, go back a number of years, back to 2010, that's about when the underperformance started. But the point here is that generally when the dollar goes up, EEM is weak, and vice versa. When the dollar corrects, we can expect a rally in the emerging markets, and not just EEM, the other ones too. So if you look at the chart, from a longer term perspective, in most cases, these sharp dollar rallies have led to sharp declines in emerging markets, and sharp dollar declines have led to sharp moves up in the EEM. So that's something I think the EM will benefit here as the dollar, if we're correct on the dollar, as the dollar continues to pull back. If we go to the third chart, this is a daily chart of Bitcoin. It looks like it's setting up. Bitcoin's in the middle panel. Looks like we're putting in a cup, maybe a cup and a handle here. And we need to, take out that prior high around 109,000. And if we do that, and it's based on the size of this recent base, which goes back to about 89, 90,000. So it's about a 20+ thousand dollar base. You know, we could see a run to 130, potentially higher. The vortex indicator in the third panel has gone bullish. We've seen a bullish cross in the daily MACD, a bullish momentum break of the downtrend in the 14-day RSI, and the Shanghai trend meter has gone back into bullish territory. So looks like Bitcoin wants to go higher from here. Chart 4 is a daily chart of copper. We have the US dollar on the top, correlation of the copper and dollar in the second panel. Then the third panel, the big panel, is copper. Copper has put in a double bottom, broke out, kind of tested the breakout area, and also has traced out what looks to be, you know, symmetrical triangle going back to August. This is a tough market, very volatile, but if it can get above that downsloping trend line up near 440, looking out into next week, copper could be set to go. We've turned bullish on the daily MACD, and RSI recently cycled into overbought territory, which is a good sign. So in most cases, longer term, the copper is another asset that does well when the dollar is weak.
Okay. Mark, any other markets you'd like to talk about?
Yeah, look at the gold market and silver. So chart 5 is GLD with the dollar on top. I don't think I mentioned, one of the reasons I started to get worried in the recent week or two with the dollar is that the COT data has gone bearish. The flips of the commercial hedgers and large speculators in recent years has timed the dollar very well. When the commercial hedgers take a bullish position and the large specs take a bearish position, that has led to rallies in the dollar and vice versa. So it's very rare when a COT data, you know, is coincidental, but with the dollar, it seems to work that way. We go down and look at the GLD chart. That's the third chart. Put in a higher low. This correction, we hardly pulled back at all after a very large move higher. That's bullish. And we've rallied back towards very close to the highs. Closing high on October 30th was 257.50. So maybe we pause here around all-time highs, but I would look for a break to all-time highs and possibly a run 280, maybe 300 as the dollar bull market continues. In the lower panels, we have the CPM showing the trend is in very strong territory, and the PMO, which is another momentum indicator we use, that has certainly turned bullish. If we move to silver, silver has not done as well as gold, has corrected or pulled back more after getting up near 32 bucks. Got the 31.80 on October 22nd. It appears that silver has traced out an ABC three-wave decline. We broke the downtrend line and then back-tested it, that red line, but we haven't really seen much follow-through as of this point. I would like to see silver break 29 and then maybe 29.66 or 70. That's where the last high was, around 29, and then a 61.8% retracement of the recent three-wave pullback is up near 29.66. I think that would confirm that silver was also headed to a new recovery high, not an all-time high. So Silver probably in the long term has the most upside, but it's certainly been lagging gold for quite some time.
Mark, thank you. Have a great weekend.
You too, Ike. Thank you very much.